Okay. It says we're live. Can you tell what this is? What is this? With this Zoom? What is that? That's a. You can't tell what the hell that is. That's a blueberry. You know what a blueberry is also known as? Juju. Do you know why? Because we have a very special guest today. Can you tell by the thumbnail? If you can, you have eyes. Congratulations. Anyway, worst introduction ever, probably. Sorry, Yashu. Love you, man. All right, today we got Hans as our special forum member. Thank you for coming on, Hans. And then, of course, the man of the hour, the Juju King himself, Yashu Sharma from Hit That Bid. Thank you very much, brother. Appreciate you coming on.
Yeah, thanks for having me on, Farzad. And you know what? I don't know if a blueberry passes as a Juju, but just since I'm on your channel, I'll let it slide. I mean, it's supposed to be citrus, but genomes don't really matter too much.
Damn, I thought it was gonna be like fruit. It's just a fruit, so it has to be a citrus. You know what? I knew that.
I mean, we can expand like no big deal. Like, usually I don't like to come on channels and start harping on the host, but but to be honest, it's also like I have to let it slide because I don't have any around me right now. So it's not.
Oh my God.
It's not like I'm keeping up the standard either. So who am I to point fingers?
Well, listen, I figure we're tight enough where you can, if you want to crap on me because of my Juju lack of knowledge, go for it, bro. Like, I'm not going to take it personal. We're here to grow together as people with our knowledge of Juju, okay? So
there we go.
It's all good. But I appreciate the forgiveness. I appreciate how kind you are.
You know how it is.
Yeah,
absolutely. Thanks for having me on.
Of course, man. I appreciate you coming on. In the comments, if you're Juju Gang, make sure you drop a Juju Gang. We have a lot of Juju Gang in here. Juju Gang, Juju Gang. Juju Gang. Make sure you can hear us okay, you can see us okay. But yeah, we're just going to sit down. We're going to have a conversation about Tesla, its performance. We're going to have a lot of if you're not familiar with this forum, really think of this format as a way for us to sit down and really dig deeply in the different things that are going on related to Tesla, the market, the broader market macro. But then there's also a lot of different things that we could talk about just that come up organically through discussion. And if you want to take part in that discussion, if you have some thoughts that you want to throw out there for us, that's what the comment section's for. I'm going to be watching the comment section closely. And then with Hans being part of the discussion as well, and Hans is somebody who supported the channel through Patreon or YouTube Live. He's another person who, if you're familiar with my channel, he's had a lot of great inputs and insights in all the different discussions. So the thought process here is forum-style conversation, and we're going to talk about all the different things Tesla and financial markets, plus a bunch of other stuff too. So maybe the first thing I'll throw out there is, actually, let's pull up, let's see how the market closed, yeah? Because the market just closed. So let's see how Mr. Market has done today. Let's see. So we're up 0.04% for the day, looks like. Yeah. Yep. So basically flat. Yeah. We gapped up for the day. So we shot up to what? 943, and then we faded to 891. Any thoughts there, Yashu? Maybe we'll start with that. Any thoughts around that price movement, and then we'll go from there.
Yeah, I mean, I was surprised with the up move this morning when we're sitting pretty, it seemed like, but we sold off. I mean, I think it's okay. I think it's healthy that the market's taking a breather. I mean, Tesla's up like 30 or something percent, 35% or something like that in the last like couple of weeks, not even. So I mean, this is kind of expected. It seems like everyone's eyes are on the $1,000 mark for Tesla yet again. And there's a lot of pundits coming on, financial analysts coming on mainstream media and saying, look, $1,000 is imminent. So it feels like kind of like that 2021 October run that we had originally got. I kind of get those vibes again from kind of financial analysts. But yeah, I mean, I think the only real report to worry about, it's kind of the dog days of summer too, guys. It's like August 1st today. Like, the market volume is not amazing in the summertime, but it seems like the next kind of catalyst macro-wise is the CPI report. I think that's on the 10th of August, so in about 10 days. So maybe that is, and if that comes in cool, maybe we start to see this strength build on each other. Because everyone right now, it almost feels like, let me know if you guys feel like this too, is like everyone's like cautious with the run that we've had. Like everyone's like, yeah, we've run, but this is probably a head fake, right? Like considering what we've kind of gone through, no one really wants to believe whether or not, no one wants to believe if this is real. So maybe towards the middle of this month, as we get our reports out around CPI, we start to see some strength building up towards the end of the year, but who knows?
Hans, what do you think?
Yeah, I mean, with it doesn't seem like we have inflation anywhere near in hand yet. And so I think there's definitely fear that it could be a dead cat bounce and that we're still heading lower in the not too distant, near to midterm future. And I think that's, reflected in what you're seeing, that people are pricing that in, at least at this point. It's still uncertainty in the market.
Yeah. I think what's interesting about the recent move is that it comes on the heels of, so when did it really start? So if we pull up the chart again, let's see. So if we pull up the chart and then we go back to when this thing really started to take off, we have, let me see, I'm like drawing my lines here. So it was July 13th, so about 2 weeks ago, right? Two and a half weeks ago, we really started to get this pretty severe run up through that level. And I think what's been interesting about that is this was about exactly a week before Tesla reported their earnings, and then after they reported their earnings, we've had this sort of second leg that has taken us up to these levels. I think what's been really interesting, and it was sort of alluded to on the Good Soil stream today, Matt and Emmett. If you guys don't follow Matt and Emmett, make sure you go follow them. But there was a discussion around that movement, and I think one of the things that really has jumped out to me is I wonder how much the market is really starting to understand what Tesla's second half actually means from a cash flow perspective, with the sort of investment grade variable thrown in there as well, And I wonder how today's single day performance, like you talked about at Yashu, it might just be you're sort of selling into some strength for people that may have bought in 2 weeks ago and wanted to take advantage of the earnings report that, that were probably, I don't know, maybe they had some thoughts or wanted to gamble on the damn thing that it's going to go back up because it's oversold. And now you're seeing that sort of selling pressure, at least at these levels, because of those people wanting to offload. But what I'm encouraged by, and again, none of this is investment advice. None of us are giving investment advice, except for Yashu. Just kidding. None of us are giving investment advice.
Especially not me.
Yeah. But I think what's really interesting is that as we get closer to Q3, I'm curious to see if that story becomes more and more told in the analyst media. So we have people like Gary Black that are singing this song. There's a free cash flow of 170 billion in the next, I think, 12 months if you back out, or through the end of 2023 if you back out capex on that 170. So it's really like 230, and then you back out 50 from capex, and then investment grade coming on live, hopefully in the next quarter or so, in the next few months. It seems like there's a tremendous amount of catalysts, and anytime we have any bit of strength in the market, I'm curious to see how many weak longs or how many weak hands are going to start shedding that have been accumulating at these low levels. And then, to your point, Yashu, we had this run up in October that lasted a month or two that took us to those all-time highs. I wonder if this is what we're in for the next, say, 6 months as we go into Q3 and Q4, just with the sheer number of catalysts that are in front of us. Any thoughts around that? I'm curious to hear y'all think about that a little bit.
I think you're talking about like the shareholder meeting, for example, next week, and the stock split, and pardon me, and investment grade, and
Q3 earnings, Q4 earnings, yeah,
Q3, Q. I think Q4 definitely, but when we talk about Q4 earnings, I think that's like third week of January at that point, so we got some time until then.
Sure,
I think the interesting thing with Tesla is that Tesla seems to do nothing and then catch up really fast. Do nothing and then catch up, and then on the downside, vice versa as well. Like, so I think with Tesla, it's not so much like, oh, how's Tesla? Like, for example, Q4 earnings 2021 were amazing. So they came out, but it was kind of like the market didn't believe what Tesla was doing throughout the whole quarter, and then the first trading day of the year this year, January 4th. Like, we shot up to 1,204, whatever, close to our all-time highs was. So it feels like the market likes to not give Tesla credit for what they're accomplishing during the quarter until like it's almost like the last second when they can give that credit in. So it's like, even though we have the stock split, which we can get into a little bit here, even though we have the stock split, we have all these financials recovering. I think you're right in the sense where the market looked at last quarter and they said, like, can it get worse than this? Like, other than COVID, like, will it get worse than Shanghai being down for a month and a half again? Berlin and Austin actually in the beginning sections of their ramping curve. Like, will it get more uglier than this? Will there be more money burning, essentially, like, to quote Elon, a money furnace, Berlin being? Will it get worse than that? I mean, the ramp curves are just going to get steeper and steeper, and Tesla's just going to go higher on that ramp curve and be more free cash flow positive on those factories as time passes by. Shanghai risk is debatable. I mean, to be fair, the CCP risk of the geopolitical, like, no one really knows. And yes, we can get into that as well. It's a whole nother topic. So, but I mean, for the most part, like, it seems like it's kind of behind us, at least in the medium term, that China risk, at least. Now, I don't know. But it seems like the market looked at that and they said, look, if it's not going to get as worse or as worse as it did in Q2, and Tesla reported, what, $2, give or take, adjusted GAAP EPS.
Yeah.
Like, they're like, wow, like, this is pretty stress tested at this point. And if we look at the latter half of this year, the second half of this year, we're talking like monstrous numbers. If they can get Berlin, and there's some reports about their gigacasting still being off, if they can get Berlin and Austin up and running faster.
Got it. So you think it's more a function of, like, negative catalysts have sort of run out, and there's really nothing outside of a force majeure that's really going to drive this thing lower. It's just like we're done with the BS, essentially.
Well, it's funny. I mean, the stock price is not always the business, and the business is not always the stock price. The theory being, in the long run, they're going to converge and be 1-to-1 in the long haul, right? And that's really what we can base stuff off is earnings. Earnings is what matters in the long haul. But in the short term, one can be fluctuating way more than the other, for better or for worse. I don't know about the stock price. I think the stock price, if the market settles down and we talk about the split happening by September-ish, we could get, like, if Amazon's any indication, when Amazon approved the shareholder stock split, and then they split, it was like that week of trading, that 5 to 10 days worth of trading before the date was actually about to hit, that we saw Amazon rise pretty astronomically before they split. But I mean, even stock splits, like, I don't think we should get long-term too excited about a stock split. It's great. I mean, it's a catalyst. It's awesome. But if we remember last stock split was, I think, end of August, something like that. And then Tesla fell, like, massively in that September after, in like the first couple of days post split. So did Apple, by the way. So it was a macro thing as well. But, stock splits for the long haul shouldn't matter. But yeah, I mean, for the short haul, I was looking towards the end of the summer into the fall. Definitely something that I am excited about, if I'm being honest. It would be great if Tesla stock was, in and around that $1,000 mark that everyone's kind of talking about. But it seems like all-time highs, we probably are, if we're talking all-time highs, probably, if that's a possibility, which I'm not even sure if it is at this point for this fiscal year, because there's just so little time left, that would have to be probably towards the Q4 ish time level, probably the latter half of that quarter.
Mm-hmm. Got it. Hans, what do you think?
Yeah, I think I agree with that. And then I was just trying to think through on, so in the short term, like, now that Tesla is held by a lot of institutions, there are still a lot of retail buyers in Tesla, but there's also quite a bit of institutional presence in the stock as part of the S&P inclusion, that, I think it's really hard just to talk about the short term, like trying to make plays on things like earnings. That we got to remember that these hedge fund managers, or at least this is my understanding of it, and y'all can correct me if this is off, but that they have a lot of, like, boots on the ground data, that they basically know exactly what's going to be reported in earnings ahead of time because of the research that they're able to get their hands on. And so they're able to make those plays with some confidence moving into earnings season. And so, yeah, like, some of this recent run up could be exactly that they're buying up before earnings, and then, they see a gap up and now they're going to unload some shares, just make a quick trade. And then, so as a retail investor, yeah, it would just, like, I try and stay away from playing in that time frame because I know that I don't have an edge there. And then, if you kind of zoom back out, if you look at the chart, it's still in the wedge shape, and it hasn't broken out on the high side yet. And so we don't know like if this is really, we can with confidence say that this is, the beginnings of a bull run, or if we're just still trading around inside of our normal range. So
Yeah.
I agree with what Yashu said as far as like it seems like unless we get like a major shutdown in Shanghai again, that the bad news is behind us. We should see just incredible delivery growth through the back half of the year. I was trying to look up and see what if they sell call it 450,000 cars in Q4 at close to the same ASP as they had in Q2. I was trying to calculate what that was going to be as far as earnings that quarter, and see like where would that put our multiple.
I think about $5. I think about $5.
Okay. So yeah, I mean that's pretty incredible EPS growth.
Yeah. I think what's another thing that I'm really been thinking about quite a bit as we go into these like next couple months is usually what I've noticed, at least from like a execution standpoint at Tesla, is that having been there and having worked there, like I can kind of sense when Tesla is like hitting on all cylinders, and this is not this isn't insider info. This is like me just kind of getting a vibe based on Elon not tweeting a lot is one. So he hasn't really been on Twitter, which tells me that he's razor focused. The other thing that I know, having been there, is that when we as if I still work at the company, when they have any sort of like reorganizational restructuring, like organizational restructuring, or aka layoffs. So they had a 10% salary layoff a few months ago. What would happen in the next 6 months or so, because I've been through multiple of them because it's just normal for a business to go through that. It was freaking fast, like stuff that was held up for say months at a time because it was stuck with somebody that wasn't doing what they were supposed to be doing. Overnight, bam, everything gets done. Okay. So that's a signal for me that tells me that Tesla's executional sort of level for the next at least 6 months is going to be at an all-time high. They're going to be killing it. And then the other one that you removed, the other variables that I think about as well is Shanghai appears to be running at full capacity. You have Austin and Berlin ramping. Maybe they're not fully ramped, but these are like momentum things that are happening within the company where people are becoming more and more encouraged about the progress they're making. Fremont is going to be going balls to the wall. You have improvements in full self-driving happening. And so all these things put together, to me, from just an execution standpoint, tells me that the company is 100% at its peak when it comes to the performance that they have going on right now. And so when I think about, okay, and again, not investment advice, when I think about Q3 and Q4 and sort of those reports coming up, I really think whatever the expectations are that are going to be set from a market perspective or investors out there, again, do not listen to my advice, but this is how I think. I think Tesla goes above that because of those variables, right? And I'm curious to see if say Q3 and Q4 come in at levels above, even if it's really high expectations because they know these sort of negative catalysts have been removed. I wonder what that's going to do for the next leg of the stock price and what that's going to do for the future performance of the stock price, given that even in a situation where everybody knows Tesla is going to be doing really, really well, they come out and they punch it in the face and they do even better than people thought they were going to do. Similar to Q4 of last year. Q4 last year, Elon's like, we're not trying that hard. We're not going to do the wave. Boom, 325,000 deliveries. Everybody's like, what the hell just happened? What the hell just happened? Q3 and Q4 feel the same to me. And I'm curious to see what that's going to do to the stock price and how the market reacts. I don't know if you guys have any thoughts on that, but I just wanted to throw that out there as an addition to the discussion. Let me know if you guys have.
I mean, that's a big next step for Tesla is getting to that, Elon even said it himself, that 2 million run rate, right? I think the market is looking for that. And yeah, if you extrapolate out June, record month altogether, it's hard to extrapolate. And I think the street, to give them somewhat credit, I think looked at that extrapolation for the month of June and went, hold on, there's something that we're missing here. But extrapolating a monthly number versus extrapolating a quarterly number are very different. And you're right. I think if that quarter three, I'm a little bit like, okay, well, maybe, but quarter four is really the big one because I think there's going to be meaningful contribution from Berlin and Austin at that point. So extrapolating out that quarter four number, and Hans, you were saying, whatever EPS, let's say, I kind of just do ballpark math of like, if it's 450,000 cars, you said in quarter four, $5 EPS. Like this quarter was a little bit less. It was $2 versus them delivering, higher than that, 250, whatever. But because of, the shutdowns and stuff, there's extra costs that they had to incur and expediting parts and all this sort of stuff. So $5, let's say EPS, quarter four, annualized $20 at that point. I think the street for 2023 fiscal year gap or EPS projections is like, I don't even know, like 18, 17, something like that. So just extrapolating no growth out for quarter four would already pass what the street is projecting for next year consensus.
Yeah. Yeah. I mean, I think that I agree that it seems like they're executing extremely well. And I just remember back to different periods of Tesla's history when I felt like the same thing was happening. Once they got Model 3 production down and they're just like opening up factory, they opened up Shanghai, Model Y rollout went quick and smooth. Like they were doing a lot of stuff and there was still not much growth. They weren't rewarded for the performance that they had shown for quite a while. And then all of a sudden, it just broke out and ran. So, I agree that I see that they're laying the foundation for that run right now. And, but yeah, I don't know as far as timing. I mean, that's why I like just buy and hold.
Yeah. Not investment advice.
Not investment advice.
Somebody here said, go ahead.
Oh, sorry. Go ahead for that.
No, I was going to say that somebody thanked me for my investment advice. Damn it. There's no investment advice here, bro. Come on, Richard. You should know better. I think Richard dialed in as Herbert Deese one time. I think it was Richard. I forget who it was. And I was convinced. I'm like, oh my God, Herbert's on. Go ahead, Yashu. Sorry, I didn't mean to interrupt you.
No.
Go for it.
I also think, by the way, it's tough in this environment because this environment is so, I think, macro heavy. Whereas in the October of last year, when originally Tesla ran, I don't think macro was too much in the forefront there. It was Tesla specific, almost like that run, right? Like, I think that weekend, Tom Brady ad came out, Hertz, a credit upgrade, 2 notches up, Morgan Stanley upgrade that weekend that led to that big couple weeks thereafter. But no one really talked about macro back then. It was kind of in the back of our heads. Of course, we look at macro, but in this market, almost everything we talk about is macro related, inflation related, recession related, quantitative tightening related. Jerome Powell's in every conversation. So it's tough to decouple the two in this environment because even if Tesla kills it, but some macro report comes out that is, the worst thing we've ever seen since, 60 years in our history of reporting or something, it can all be for naught in terms of the stock price, at least. The business, like totally agree. I think quarter four is going to be massive for the business, but that's just kind of in the back of my head is macro. So as we sit here, we're in a recession. We know that interest rates have just gone up last week again. The next time they can potentially go up is September, and the markets are still pricing in 75 basis points for that, or 50 basis points. But now we're officially in a recession, so it's kind of like you can't.
Or are
really
we?
serve. We are. Oh yes. Sorry, I don't know. I'll have to double check.
I'm kidding, dude. I agree with you. I'm just being a pain in the ass. Go ahead.
So yeah,
what's the definition of definition again?
I'll have to ask. I'll have to ask Pelosi next time I see her. I'm not sure.
Yeah. Whatever Joe Biden says.
Yeah. So
sorry, Yasha, I didn't mean to interrupt you. Go
no,
ahead.
but yeah, that's it. That's my point. It's just tough right now with macro.
Yeah, so I mean, I guess that's one of the big questions in my mind is, say we have EPS run rate of $20 in Q4, and the stock price is at around $1,000. Well, is that a PE of 50? Right?
Yeah,
50. Yeah. So is 50 a reasonable PE multiple to pay for a company that's compounding growth at 50% per year on average, at the level of revenue that Tesla's at, in a macro environment where we're like, yeah, interest rates are going to 8%, 9%, if we're in something crazy like that?
It's tough. PE +1. Like, let's say if you're looking at PE for just the next fiscal year, I think it's a little bit low. I think what what I like to do, at least when I'm looking at it, is go from like a reasonable year and discount back. So like I think 2025, some like 2030 is hard for me to wrap my head around. I know some people like to look at 2030 for Tesla. I just think there's so many variables that it could be like it could be the numbers kind of get crazy, so
It's
I don't
impossible.
even bother.
Yeah.
Yeah, so like 2025 is about reasonable, but even talking now, it's been like 2 years. I should probably push that out to 2026 or 2027. But 2025, 5 million cars, let's say 4.5 million cars. For Tesla, you discount that back, and even if you take a 50K ASP, 20% EBITDA, you get to levels where and then you're like, okay, I'll pay a 50 PE for that in terms of a growth and discounting that back. I think that's more reasonable. 50 on a +1 year where, I mean, EPS is growing way more than 50%. Revenues are growing at what, like 87% or something like that. So but then again, I'm one person in the market. Whoever has the most money dictates the markets at this current time. But in the long haul, I think if Tesla continues their that's why earnings matter so much now, because back when Tesla was still like, you don't know if they're going to be profitable this quarter. It depends on the ZEV credits. And back then it was a different kind of model almost. Like now it's like they're positive, they're profitable, free cash flow positive massively. Now the question is, how long can they sustain their growth at the current mix of cars that they have? So that's kind of where I look at it as 2025.
Okay. Speaking of maintaining, current profits at the mix that they have, did either of you see the interview on Autoline with John McElroy where they were talking about how he's they had a guest on who has done a bunch of research on the automotive buyer loyalty and how Tesla is just like destroying all other automakers in loyalty?
I did
like 70 or 80% like return customers.
Yeah, I'm gonna find it because I actually want to play that. It's a very important video. I think what I said was, if you really, I forget what the hell my tweet said, but I remember that video, so I'm looking through it right now to find it on Twitter. Maybe give us like a quick synopsis, Hans, while I go find it. If you don't mind.
Yeah, so the premise was, this was John McElroy, he does Autoline, and if y'all remember that Sandy Munro did some Autoline interviews back in the day when they were doing their Model 3 teardown, and it was before they really did much with Munro Live. And so this was like the first that we really got to see of Sandy tearing down the Model 3, and it was on John's podcast. And so anyways, he's been running this for years, and he interviewed a lot of great people from sorry, I'm getting a bunch of feedback in my ears.
Sorry, I messed up. My bad. Go ahead, okay. Hans. That should be better.
Much better. Yeah.
See, I told you I don't know how to work technology.
So anyways, he interviews a bunch of people from the automotive industry, and they talk about all sorts of really deep in the weeds automotive business. But his guest there, was it Tim Libby? Yeah, from S&P Global. He does a bunch of research on, so when a buyer comes into the market for a new vehicle, they obviously have existing vehicles. So what vehicles do they have? What brands are those? And are they returning to the market for the same type of car that they already own? Are they coming to the market for a new car that's of a different class? And then are they moving from one manufacturer to another manufacturer, which is known as conquesting? Like if a new manufacturer comes to the market and they're able to pull buyers away from existing manufacturers, and those are conquest buyers. And what he found is that basically Tesla, with its 4 models, is just demolishing the rest of the automotive industry in the number of repeat buyers that are coming back. Basically, if you own a Tesla and you go back to buy another car, there's like a 4-to-1 ratio that you're buying a Tesla versus anything else.
Mm-hmm. That was a really good job. Summarize. I might not even play it because he did such a good job doing it. But here's the link. It's on Sawyer Merritt's Twitter, and it was very, very eye opening. And I think what's also really sort of interesting to watch too is like how I'm muted, yeah. So how many automakers out there are taking that seriously? Like how many automakers out there, say outside of your Fords and your people that seem to be really on the sort of the right path, are taking that seriously? That there's just a broad level of market share stealing, which we saw initially with Model 3. When Model 3 first came out, Tesla had this sort of a list of here are the most traded in cars for the Model 3. And it was the Prius, a bunch of SUVs, a bunch of sedans, a bunch of pickup trucks, a bunch of luxury cars. And at that point, that was the signal that should have said, this is not this is completely different. This is a
category
gigantic,
shattering.
destroys everything, right? And so I would love to do a poll real quick, actually, while everybody's on here. I would love to know the people that own Teslas in the chat. Okay, so if you own a Tesla, what kind of car did you sell or did you get rid of to buy at Tesla? And I'm very curious to see the responses here. So we'll do sedan, we'll do SUV, we'll do pickup, and we'll do luxury. We'll just do that. And then see what people say. It's not super scientific, but I'm really curious to see what the outcome's going to be from that poll. But yeah, I highly recommend everybody watch that clip from the discussion.
Well, yeah, and so I saw that Emmett was in the discussion. What it made me think of when I watched that episode was their conversation with Drew Dixon, and he's one of his main points is that there's no way that Tesla can get to 20 million vehicles in 2030 without massively expanding the number of models that they offer. And that was one of the points that came up in the discussion on Autoline with John McElroy, was that in the past there's been a very strong positive correlation between the number of models and the cadence that you're introducing them into the market and brand loyalty. And so you can get people to keep coming back and buying your vehicle if you're refreshing it continuously and you're covering a broad spectrum of market needs with a whole variety of models. And that right now, at least currently, Tesla's completely destroying that historical correlation that they can take from everybody and everything, and they only need the 4 models to do it currently. But yeah, that I think that speaks to just the technological disruption that's going on, that not only the EV powertrain, but just the superior product that a Tesla is compared to existing automotive companies' offerings with just the software first offering that it is. To me, it seems like that correlation in the past has been a proxy for just like, what's the best engineered car available on the market right now? And when you've reached a point in the market cycle where there's a heavy amount of competition, the product is basically commoditized, then you need lots of different ways to differentiate your product in order to get attention in the market. Whereas when you've made that step change in technology, like the Model 3 is still going to be a better experience or the Model Y, I think, is really the big one. This is going to be a better experience than 80% of the cars on the road. Like, there's a very limited number of needs that people are going to have that the Model Y can't fulfill for them. And they're not going to have to release anything new to fill a market segment beyond that for a long time, just because, competition is not really coming. Yeah.
Yeah. Some of the comments I want to highlight here. So we have people that have sold Prius, Chevy Tahoe, BMW, a Suzuki 4x4 or SX4, sorry. Fiat Pinto, I'm guessing, Volkswagen Caddy, Jeep Wrangler, an M2, Jeep 335, Toyota, Infiniti, Ioniq, Jeep Grand Cherokee, F-150, Honda CR-V, Volkswagen Touareg. So you can kind of see, right? At least Nissan Leaf. It's a very broad spectrum of cars. And again, this is a small sample size. We're not going super scientific here, but I'm just there was something that like along those lines when Emmett and Matt interviewed Drew on their channel, which again, if you guys haven't watched it, I highly recommend you do that on Good Souls channel. A lot of the bear argument is that this is not something that applies to Tesla because people are still going to want to have that segmentation, that second layer of segmentation, because that's how it's been, and that's the differentiation between the cars now.
Well,
when
that's
competition
not how
comes,
it was when we switched from horse and buggy
exactly
to the car. Like
exactly
at one point, Model Ts were 95% of the vehicles on the road, and so that way of thinking doesn't necessarily hold true when you go through a major technological transformation. So
it's just a brand new product line. It's a brand new product line. So,
and Elon has said specifically that there's going to be a Tesla in every major product segment. And so you're going to have a compact car, you're going to have a van, you're going to have, there's going to be at least one in every major category.
Right. Any thoughts there, Yashu, before we shift topics here?
I mean, I think the writing was on the wall when we saw well, I'm not sure if you guys, hopefully you guys get this reference. Hallmark movies, those cheesy Christmas movies. The writing was on the wall when we started to see Teslas appear in like almost every other movie. Tesla's, it's like a $50K car. You would think they'd want to like do some sort of promo with a Lambo for the hot shot in the movie or something, but no, like Tesla doesn't pay them for that marketing. And yet they're going with the Model S or the Model 3. Like I've seen it like in every other Hallmark. I watch a lot of Hallmark movies apparently, but the writing was on the wall. Like you don't have to pay people or influencers to promote Teslas. Why? I mean, they're a $50,000 car. All intents and purposes, you would think influencers would run away from a $50,000 car and go promote a $200,000 car that they can take photos next to. But I mean, the writing was on the wall there.
Yeah, they're doing the opposite. Actually, I want to use this tweet as well from Sawyer. Sawyer is a very popular guy on my channel because he's one of my main folks that I use to like get my breaking news, and the dude's just on it. So Sawyer, if you're watching this, thank you. If you're not watching this, go follow him right now. Even if you're watching, go follow this guy. Look at his handle, Sawyer Merritt. Go get him. Real quick, Hertz CEO says they'll continue to take delivery of Teslas and have 20,000 in their fleet right now. They placed a $100,000 order in 2021, so they're 20% through their purchases. And he added that Teslas are saving Hertz 50 to 60% on maintenance costs compared to their ICE vehicles. I think depreciation on these cars will be better, and these cars being EVs. So we're talking about, so the reason why I tied this to the Hallmark thing is that I see this as a very similar thing here, that now we have a company that has a tremendous amount of data. They literally own 20,000 EVs, which a percentage of those are going to be, 95% of them is probably going to be Teslas. And talk about a company that truly has data sets around running costs, maintenance, ease of use, whatever, so on and so forth. And they're coming out and saying and sending the signal to the broader market that says, everybody, it's literally half the cost of a gas car to have an EV. And we know that because we have 20,000 of them. Do you guys see this as any sort of major move for the company, for the stock at all? Because I'm curious to see how broadly reported this is going to get, because this is a big freaking deal. This is a huge data set from a company that has traditionally been 100% ICEs that now say, from a business perspective, it makes so much sense for us to have these because we've literally cut our maintenance costs by half. What are your thoughts?
Go for it, Yashu.
My thoughts are that I think, first of all, I think we all knew that. Like them coming out and saying it for sure, I think does speak to some people that didn't believe it already. I have there's very little maintenance with any electric vehicle, like just changing the windshield wiper fluid. Maybe every now and then you'll get some sort of small like recall or a sensor. Like it happens with every car. But I think the bigger thing with Hertz is that my mind immediately goes towards, okay, if Tesla ever satiates consumer demand, they can just have a different enterprise division or something. I'm like my head already, and this is not to change the topic or boycott, but like
No, please.
like the Tesla App Store. Like what if there was like my mind goes into so many places with the enterprise B2B model with electric vehicles, the connectivity, the ability for, like, for example, like Hertz talks about, or maybe it's Avis, that, you know, they talk about, they hate the fact that they have to manage all these cars, and they sometimes they have trackers, some cars don't have trackers, where they are, how many did they ding anything, how fast were they going, like, do you imagine, like, do you see the power that any electric vehicle, but right now it's mostly Tesla because the interconnectivity, but one day when there's an app store and there's interconnectivity, why would any car fleet manufacturer or a car fleet company ever want to not buy an electric car for that reason? And we talk about satiating consumer demand. Forget about consumers for a second. Let's go, direct to businesses. Tesla could, like, quite easily just grow their fleet just based on enterprise demand, using Hertz as a case study. So that's where my head goes immediately when I read that. I get it. I love the fact that they say, look, it's so much cheaper. Depreciation, by the way, like, I remember when I bought the Model 3, I used that as an excuse for myself. I said, look, it'll only depreciate 5% in like 2 or 3 years. I'm happy with that. It's appreciated. And I do not think that it's healthy for us to think that that's going to be the case moving forward in the next 5 years, and telling people, look, buy Teslas, they're going to appreciate without FSD, let's say, per se, if you want to go there. Because I think it sets the wrong expectation for consumers if they're buying cars today thinking it's just going to be a stock or something that's going to go up in price. Maybe it does, to be honest, but I don't think that's what we should be telling people that want to buy Teslas today. We should be telling them buy it because it's the best car that you can buy on the market.
Yeah.
But the Hertz thing, I think, is a bigger story in and of itself, because it tells us about the enterprise model that has yet to be tapped.
Yeah, I 100% agree with that, and I think it's important to just highlight, don't buy because you're expecting appreciation, to preface what I'm about to say. But when I saw that, it kind of scared me as a retail person who might be interested in buying a Tesla. That I see, yes, we as Tesla fans, fanatics, do the research. We know that is the case, but when other companies like Avis and National and all these other enterprise, when they're looking at this, they're like, wow, like, they went out and they proved this, and now we have to compete with them. And so we can't continue to operate in a competitive environment and make money when we're going up against Hertz and their costs are significantly lower than ours. And so there's definitely a very real possibility that enterprise car buyers are going to be the new market price setters in the EV space. And, it's going to make it much more difficult for individuals to be able to afford to purchase EVs when there's a very real business case to be made for why they should be valued at a higher level, because they allow people who are operating businesses to make higher profits. And so that, that'll eventually end up getting competed away. But that was the thing that I thought about when I saw that.
So I did a quick Google search. What percentage of cars sold go to fleet and businesses? So roughly 1 in 5 new vehicles sold in 2019 was a fleet purchase, a car or truck bought by a rental car company or other type of business or a government agency that buys vehicles in bulk from 3 or 4 at a time to tens of thousands per year. So that's a lot of freaking cars. That's 20% of the total market that's going to enterprise.
Yeah, and if 5% today of the market is EVs, well, that's 1 in 20 cars. And so you still got 3 out of the 4 of those that they, if all enterprise cars decide, hey, we want to buy EVs, well, there's not enough EVs just to supply only the enterprise buyers.
Wow. Yeah. So I'm wondering how much of if I'm an ICE, if I'm a legacy automaker, why wouldn't I make that my primary target to become more of a fleet EV seller? Because I'm guessing those folks are not really going to want to buy like the best product. They just want to buy the one that makes them the most profit. So I'm starting to think through that now. It's like, okay, so could the market for these legacy automakers be actually bigger than we think it might be? What do you think about that?
I know that there are startups that are 100% focused on this right now. So the question will be whether or not they can actually succeed in delivering products that are competitive and, be able to supply the demand.
What do you think, Yashu?
I think if you look at the difference, like incentives wise, always look at the incentives as a car fleet company, as an enterprise or an Avis. What's my incentives versus a consumer? I think the consumer will optimize. Like what would be different in terms of optimization from a consumer level than an enterprise level company? And I think the enterprise company, the biggest thing that they want to make sure that the consumer doesn't care about is turnover, like turnover of the car. How easy is it for the car like to change hands? Because it's like a house. Like if you have an Airbnb, the more people that or the more parties that go through it, the more dinged up generally you know that the car is or the house is going to be. It's like hotels. Like why are there hotels versus just homes everywhere that everyone rents out, right? So I think it's the centralization aspect. So if a legacy automaker can prove that not only, I don't think an EV by itself is going to satisfy that. I think it's the interconnectivity of that fleet. So we talk about cars communicating back to headquarters, the ability for Tesla's cars to be like right now, I could pull up my camera for my car and see where my car is sitting at, left, right, front, back camera, whatever I want to look at, I can talk out of it. So these aspects I think matter more than just the electric part as well, which is why I think it's not just like, I would love it if Legacy Auto can find out a way to make that profitable and make that their thing, because someone's got to serve the market, and it's better. Yeah. It's better that someone does that than someone doesn't. And to be honest, I kind of hate I hate the fact that Hertz is like backlogging Tesla to a degree. As an investor, I love it, but from a retail perspective, I hate the fact that Hertz is almost like backlogging Tesla to the degree where like consumers, like retail people, can't get their hands on these cars anymore, because Hertz is like, it's kind of like that real estate developer that's buying up all the land and you're trying to start a family in an area. It's like that same kind of and then they're flipping it on the open market. I saw some articles about that, so I'm mixed about it. But,
or renting it out, like the ones that are buying up homes and then renting them out instead of putting them up for sale. Yeah.
It's a free market. Anyone's like, I love free markets. I'm a capitalist. I think it's great if you can within legal parameters, of course. But yeah, I mean, there's something about like eventually, like right now we're Austria and Berlin are not on to full ramp yet. So, there's still supply constraint there. But yeah, I think there must be a way where maybe Tesla can upcharge these fleet companies. Like, every consumer gets a Model 3 at $45K and every enterprise level company that wants to buy for their fleet gets it at $60K. And then they just arbitrarily mark it up because, I mean, it's a business. I mean, if you want to buy 5 or more at a time, maybe you have to
especially if you package it with the platform software that they're going to need, which it reminded me a lot of the conversation that you had, Farzad, about Palantir and how they were talking about Airbus and how Airbus offers a lot of downstream services and visibility, using the Foundry product that has been packaged into Skywise. And, Tesla doesn't need Palantir to be able to offer all of that same type of functionality, visibility, data, insights, and connectivity. They have the software chops to provide all of that to any sort of commercial customer who's going to run a business that's built on top of Tesla vehicles or energy products or whatever, as a service. And so, they could have a software suite that comes along with every Tesla that is a commercial specific software suite that justifies that additional price tag. And talk about recurring SaaS revenue.
Yeah. And we're not even talking about the impact of full self-driving and how Hertz can become that fleet manager of like just, bunch of self-driving cars as well.
That's just an option, assuming that full self-driving doesn't work out. And then it's like, multiply that by 50 or 100 if FSD does work. Yeah.
By a lot. Real quick, Michael, my delivery day was just changed from August 1st to 15th to September 19th. I should blame Hertz?
Yes.
Yep. Yeah, go write him a tweet. Be like, you son of a.
Just go rent for them.
There was another comment here from Richard. Hertz loves renting Teslas because they charge a premium for it, and that's another great point because that sort of cachet that Tesla carries.
Yeah, and Uber drivers have been finding this out too. Now Uber is allowing
True.
drivers to rent Teslas, and everyone. It seems like everyone's winning. The drivers are winning, Uber's winning, Tesla's winning, and the customers seem to love it. So,
yeah, it's kind of it's what's been really interesting about this whole thing is the whole notion that the entire Tesla community has sort of seen this competitive sort of separation between Tesla and everybody else that we all knew about 10 years ago, however long we started following the company. These inherent leads that Tesla had, they're becoming a little bit more mainstream now, and they're becoming applied by businesses, and there's people out there taking advantage of these things. It's making economical sense to take advantage of these things. And what's super, so then where my brain goes to is like, okay, it just feels like there's one more lever that Tesla has to pull to truly become the player for everything. Because you still think about Model 3s and Model Ys, you think about the cost benefit they have to operate, they're still luxury cars. Yet you still have to pay $300 a day to rent it from Hertz. But Hertz is making 50-60% on that car. What happens when Tesla now has the option for somebody to rent a car for effectively under $100 a day, $50 a day, right? And they become that primary player that can truly make that happen. They're really the only one because of their scalability, because of the economies of scale, because of the expertise, their efficiency, everything else like that. And it just seems like whatever that next car is, if it's that $25,000 car, the robotaxi, there's only one layer left for it to be truly mass accepted. I don't know if you can hear my dogs. They're going crazy. They're really excited about the robotaxi. That's why they're going crazy. So I mean, it feels like to me we're only a year or two away from that, and what are the implications of that? And the fact that we have the master plan part 3 that Elon has been teasing for quite a bit, and we have an annual investor meeting that's happening this week that I'm assuming they're going to be talking about scale for the next year, because that's really the next stage of the company. And again, I just can't help but get excited. I can't help but get excited about these like truly crazy things that are about to happen, and we're starting to get signals from Hertz and Jim Farley going on Monroe Live today. I got a chance to watch the whole thing, and Jim being super open about how Tesla is a market leader. This fucking rest adult dating site, son of a bitch.
I hate those guys.
Go away. Fucking assholes. Sorry, I shouldn't have cursed. Sorry, everybody. There's just all these signals that keep appearing over and over again that continue to reinforce the fact that we're going to be really close to that tipping point. I don't know if you guys feel that way, and I don't know if I'm being super optimistic about it, but like, do you guys feel like we're just like one more vehicle away, or just 12 months away from this thing just blowing up to a point that's just going to be unstoppable? How do you guys think about that? Please temper my optimism if you can.
Hans, go first. Why don't you? Oh, you're
on mute.
You did mute. You're on mute.
You're muted.
Yeah, I don't know how to temper the optimism, since I feel the same way. Like I don't see, well, okay, here's my best shot at tempering the optimism. The macro environment that we're heading into is still very, very uncertain. And we still live in a world that is massively globalized, and there's still a lot of supply chain interdependency that exists. We have not yet gotten to a point where we have localized supply chains in all the ways and the places that we need them. And so there's definitely macro risk that if things continue to deteriorate with Ukraine, and we potentially get into a nuclear conflict and things start spiraling, that we could be in a world where a lot of this stuff kind of goes out the window, just because things cannot move from where they are originating to where they need to go in order for products to get made. And that's a really scary world. So, but in that scenario, Tesla's still probably in one of the best competitive positions to deal with that. And there's a lot of other worse things that we're worried about than how our Tesla stock is performing. But yeah, apart from that, like if we don't have major force majeure events, Elon is holding, he's got all the levers that he needs to just execute like insane for the next few years. And they will continue to deliver what will, in the long term, be incredible value for every single kilogram of battery raw materials that they pull out of the ground.
Mm-hmm.
Yashu, what do you think?
Yeah, I mean, for sure. If like I saw a comment here, someone said if there's a nuclear war, money won't be a thing. Yeah, exactly. I mean, if there's a nuclear war, like nothing matters. Like, forget about our.
Yeah, but what's the likelihood of that, though? Right? I mean, are we really? Do we really think that's going to happen?
I hope not.
I hope. Yeah, it's a power law thing. I would say the probability is low, but the stakes are really high.
Yes, exactly. But barring that, sticking with just like I almost find it funny sometimes, like we as like EV enthusiasts, let's say, talk about the EV in almost like a way where like I'd imagine people when like the smartphone revolution was happening, people were like, dude, the iPhone, like the calls are so much crisper and like, text goes so much faster. It's like we're so focused on the direct benefit of the product, we don't see the auxiliary effects of it, and namely the Tesla App Store. I keep going back to it, but I just think this opens it up. And Tesla has a choice, by the way. Like, I'm not sure which way they're going to go here. Either they go we make all the apps, we are super centralized for every data point that you can get from your car, or we're kind of take the Apple model. We'll have to approve your apps coming in, but it opens you up to entrepreneurship coming in and showing you what is possible. Like, entrepreneurs are the backbone of the economy with technological progress. So I'm really excited to see if Tesla takes that approach or if they centralize everything, because I think this opens it up to forget about more units coming into the fleet. Why would anyone ever want to buy a car that's not a smart car? Let's say, forget about that term for a second. A car like a Tesla that has interconnectivity, because it can't, there's going to be things like, now we can't imagine buying a phone that doesn't have an app store. Why? I mean, we have all these apps, we have all this technology, we have we do so many things on our phone that's not just related to phone ship that like it was before. And I think that's where Tesla is headed. So even if we have, supply chain issues, like you say, Hans, in the foreseeable future, Tesla can still grow their revenues, their technology base, just by the existing fleet. So yeah, it's exciting.
Yeah.
Nice. I want to play a quick video from Monroe's channel. So if you guys haven't yet watched the interview with Jim Farley from Ford, and I saw some questions in the chat asking me if I watched the channel or I watched a video with Jim Farley, Doug, and oh my god, I forgot her name again. Hans, Linda
Zhang, I think.
Linda Zhang, yeah. Doug Field, right, was the other gentleman
Yes.
that was on there. Yes, look at me. I have a brain. Thank God. There is a video that was published by Monroe Live, which I'm going to share here on my screen in a second here, and I want to play a clip from it. And it pertains to full self-driving, as we're talking about like apps and interconnectivity that Yashu was talking about. So we'll use that as a segue to get into that. Let me show you this clip, and then I'm curious to hear y'all's reaction.
You're muted, Farzai.
At this, I literally was saying I don't know how to work technology as I'm muted. That's how bad I am at this, bro.
All good.
Sorry, everybody. Please bear with me. Okay, here we go. And then you guys may have you guys may have to mute on your side as well to be able to not have echo. So just give me a heads up if you guys don't mind muting on your end, and then we'll play this clip, and then I want to hear your reaction.
Maybe 5 minutes a day on the 405 to get home from Torrance to Santa Monica, and I was shocked. I didn't even know this. When I traded in my car, I actually had bought it from Toyota. My Prius was worth $5,000 more than a Prius without the sticker. And I was like, really? And he said, yep. No, it's a trade-in. We'll give you $5,000 more because you have the HOV sticker and it's good for another year or so. And I said, all of them are worth $5,000? Yep. So that's the cost that people are willing to pay for 5 minutes a day. And what if we give people 45 minutes a day? Holy smokes. Talk about, the killer software that we can ship to a car and unlock value for customers and create a lot of value for the company. The light bulb went off.
Well,
Okay. So that was within the context of Jim Farley talking about how he owned a Prius when he was a Toyota before he went to Ford. And then he went to sell his Prius to buy a Ford vehicle, because obviously that's what you have to do if you change companies, apparently. And the dealership was offering him $5,000 extra on top of a regular Prius because of that HOV sticker. And people were willing to pay that extra money to save 5 minutes of a drive per day. So he talked about how on the 405 in California, the non-HOV lane, if you use the HOV lane instead of the non-HOV lane, you save about 5 minutes just on your drive, okay? Because the 405 is so insane. So then in his mind, the light bulb went off. I don't know when this happened, that people are willing to pay $5,000 up front to save them 5 minutes a day as time as a currency. So he's valued time as basically $1,000 a minute. Okay. So in the case of full self-driving, if full self-driving is completed, which I believe it will be, but let's say it's completed, the CEO of Ford has just placed a price on what full self-driving actually is worth. And his saying that it's $45,000 essentially, because the average person drives about 45 minutes a day. If you really think about it, I think it's 20 minutes per, like going there and coming back is average in the United States. So he just set a price target of $45,000 on full self-driving. And it seems like he's just come to that realization. So I'm curious to hear you guys' take on that. Do you agree with that? Do you disagree with that? What kind of goes through your mind as a legacy automakers coming up with that conclusion? What does that imply for Tesla? What are the margin implications here? Because Tesla's charging, what, $12,000? And then Ford CEO is very openly saying, hey, we think it should be worth $45,000 to account for the average driver. What do you guys think about that?
Go ahead, Hans.
Yeah, I mean, I think it's a pretty crazy number when you step back and think about what, because he only had like a year's worth of the HOV sticker. And so, yeah, it's like you're paying $4 a minute if they drove 5 days a week, and say 5 minutes a day that they drove. So, that's like $240 an hour of time. That's what the rate for an hour is. So I don't know. I think that's a lot to pay for that time for most people in most situations. But I like the way that Jim Farley's thinking about it. And, maybe there's a law of diminishing returns and you can't charge that much once you have this widely available, but there is clearly a lot of value. And I think that's the main takeaway, is that there's a lot of value that people are going to place on being able to save that time, and having a vehicle that can do that for you. And like we talked about earlier, it doesn't matter if an individual can afford that vehicle that can do that for you. If an individual can't, an enterprise will, and then they'll rent it to you on a per mile or per hour or whatever basis. Either way, your cost will, dramatically decrease as the end user. But someone, there's a lot of value that's there, and someone will be willing to pay the market price to get that and then provide a service that's based on it.
Yeah, I think I think first of all, we should probably clarify. I don't think he's putting the price on that. I think he's saying that that's what the dealership was saying. And so he's extrapolating it out, but I'm not sure if he's directly saying like that's his value proposition on it. But also, I mean, I think it's more, but to your point, I mean,
go for it.
Almost like in defense to you is like, if it's worth it, it's like it would be worth $45K if it was 99.9% complete. But the minute you get to full self-driving level 5, there have to be like a jump step higher than 45, because it's not like FSD is not, is worth whatever it's worth. If it's 50% done, 60% done, 70% done, but the minute it's fully done, it's a totally different game because it allows you to do so many more things than just driver assist all of a sudden. So, you know, to your point, it's probably worth more than 45K then at that point. But I was confused for a second because, like, for example, in BC, we can just get an HOV sticker. We just like put in we fill out a website, we just get it. Doesn't every car get it? Or in California, is it like a select amount that his was special, that he had it? Or I'm not entirely sure why that was special.
That's a good question.
I don't know. But my understanding was that because it was a hybrid, that at that time that he owned it in California, that there was a special exemption that he was able to drive as a single driver in the HOV lane.
Oh, I get it. So he was basically saying like, because it was a Prius, it was worth 5K more, not because he just had the sticker. Because presumably
a Prius with an HOV sticker was worth 5,000 more than a regular Prius.
But then any Prius could just get an HOV sticker for free, no? Like that's how it works here. Is we just like
that's a great question. Yeah. Maybe in the comments, anybody from California can you help us clarify that a little bit? That's a really, really good question.
Right. I was just a little bit confused. Anyways, but you know, as you said, the point still stands.
It's the 5 minutes. It's the 5 minute save that's people are willing to pay $5,000 more to be able to save 5 minutes. That was sort of the way that he put it within context. And what you said, that's sort of like, again, like I'm trying to temper my optimism here as we get closer to level 4 and level 5. So if this 5 minute sort of thing gets applied further, so let's just under this scenario, $45,000 or let's say $1,000 per hour seems to be a price that's out there that's realistic for people to pay to be able to save a minute. Okay. And then you layer on the network effects of the full self-driving, full level 5 autonomy system that allows you to go anywhere and rent out your car and use it in a fleet, so on and so forth. What comes to mind is when Elon originally touted FSD as sort of this network effect vehicle, and he was throwing out numbers like $200,000. I think 200,000, 250,000 is a number that stuck in my head, where he said, hey, this is what we think the real net value of this technology is about $250,000 because it's going to save so much time. And then within the context that we just went through, with the CEO of Ford coming out and saying that people are willing to pay $1,000 an hour to save time, that 200,000 plus number becomes a real thing. Because if you put the $45,000 price on that car, then you say, now that you're adding it to a network effect, the utility of that car goes up 5x because it's not sitting in your parking lot. You're actually able to get it out there, and you're at 200,000 right there. So that number becomes real. You know, that number becomes real just by using very basic math based on what Jim is saying. Which, again, that gives me even more confidence that says if Tesla is able to solve autonomy, which, in my opinion, if there's one company that can do that, is Tesla because of the talent they have and the scale, so on and so forth, then this 200,000 number, I'm curious, will it start propagating through the masses and the analysts and the investors, and they start seeing this as a real number that's out there, and it starts getting priced into the stock. And then what are the things that would need to happen for it to act? Like, will it take a Ford and a GM or a Honda or whoever to come out with their own level 5 system that says, oh my God, we think we can make so much money here with this thing. And then all of a sudden you're looking at Tesla and they're already like 5 years ahead, and then they'll get the valuation overnight. You know what I'm saying? So I don't know if you guys have any thoughts around that, but that's sort of where my head goes to.
Yeah, I would say one thing is that value is in particular markets. Like, that's not the universal value of that technology. Like, you're going to need to be in LA, in San Francisco, in New York, in order for people's time to be that valuable. And then the traffic having to be so bad that, you know, you're going to be in traffic that long. But, you know, that's a very large market. So, you know, there's a lot of money to be captured there, but that's also a power law distribution. It might be like 10% of total miles driven or probably less since it's such a slow speed. Maybe 10% of vehicle minutes or something. You could think of it that way, that you could get that type of revenue off of, and then it's going to be significantly less in other driving scenarios.
It sounds like, by the way, and there's a comment here that explains it now. Priuses get Priuses now don't get HOVs or HOV stickers. Rick K says they don't get HOV stickers anymore. Only EVs do. So the old legacy ones that were grandfathered in are worth more. That's why. That makes way more sense.
Gotcha.
But okay, so to solve for by the way, thanks for that, Rick. But to solve for
I'm trying to find them in the comments. Where what's the timestamp?
He just super chatted too. You can just pull that one
up.
The
two.
Oh my god, yep. You mean the one that's bright blue on my screen? Thank you, Rick, for the super chat, brother. Thank you.
But to get to the root, I almost look at again, first principles. What is a robotaxi network worth? I just do this, and let me know if you guys think my reasoning is off here. How many hours in a day do you guys think, if you were to hire a chauffeur safely, they could drive in a 24-hour span? Like, how many hours would you say?
Like maximum number of hours where the driver is driving safely. So there's going to be some sort of like tail effect, right? So they're going to be at 100% for say, I don't know, like 6-7 hours, and then 90% by hour, I don't know, like 12, and then it sort of like plummets. I don't know, like that's kind of how I'm thinking about it.
Let's
There's
say
a
12.
cap.
Yeah.
So how about you, Hans? What do you think? 12, does that sound reasonable?
I was just looking up. So there are regulations for semi-truck drivers. They cannot drive more than 11 consecutive hours and work a maximum 14-hour shift. So, yeah, I think 12 hours is a good, reasonable.
Okay.
And that, like, if it's going to be sustained, I wouldn't want someone driving 12 hours a day for,
forever, right?
5 days a week. Yeah.
So the way I look at this is FSD is basically like if you hire 2 chauffeurs, one to work for the first 12 hours of the day and one to work the second 12-hour shift of the day, and you hire that person in perpetuity, or those 2 people, let's say, you can have a gang of them. It doesn't have to be the same guy every other day, right? But you hired essentially 2 chauffeurs, 12 hours from, let's say, 12 a.m. to 12 p.m. and then 12 p.m. to 12 a.m. And you hired them in perpetuity, and you were kind of like just like the business owner for this chauffeur business, right? At the end of the day, is that not what FSD is worth? It's worth having 2 chauffeurs. And granted, yes, you could make the argument for safety on top of that, increase safety with FSD, of course, and there's no driver fatigue. He doesn't have to stop to eat and go for bathroom breaks and all this sort of stuff. But at the end of the day, like, the value of FSD should be pretty close to 2 chauffeurs you're hiring in perpetuity. And so I don't know what that cost is, but that's just the way I kind of look at it. Of course, I think semis are a little bit different. If you do a convoy, more of a convoy situation there, like cost can be lower, but that's what I look at as FSD. So if you say 200,000, I'm not entirely sure. I guess it depends how much a chauffeur. Well, there you go. Farzad's pulling it up. How much does a chauffeur cost? Between 30 and 50 bucks per hour. And of course, New York's going to be like 100 or something, right? But so. And then, yeah, if you do the math, I guess Farzad's doing it right now, 24 hours a day, $1,200 a day at 30 bucks an hour. For the whole year, it's about $500K with tips and all the taxes, payroll tax, and whatever you pay as a business owner, right? So like almost like that's the way I look at it in terms of what FSD is worth.
That's a lot.
Yeah.
Let me do that again. Yeah.
Oh, by the way, I should probably mention this as well. Like charging, like you can't. There's no way
I was gonna say handicap it and do it like 18 hours a day or something, because you're gonna need downtime on the vehicle.
Exactly.
But yeah.
So 18 times. So let's go into the low range too. 18 times 30.
Turn your mic this way.
So 30 bucks an hour times 18 workable hours times 365 days. So 200,000. Per year.
Okay, there you go.
So again, it's that 200,000 number that keeps coming up.
Multiply by how many years of the car you have, and you like as a Model 3 owner, you're not going to have it in the fleet like all day and never use it yourself, right? So there's some spreading there of that. So, but yeah, I mean that's the way I look at FSD value is like, what is it for me to hire chauffeurs and just drive around people all day, and that's the value of FSD, I think.
Yeah, that's why Ryan has like 50 plus reservations on the Cybertruck. with the locked in FSD pricing.
Yeah, exactly.
Smart.
A lot
man.
of people. Yeah, a lot of people have Cybertrucks locked in with the old FSD pricing. I think it's smart. Yeah.
I have a few, but I
Yeah.
don't have 50.
All right. So let's maybe for the last 15 minutes, Yashu, maybe we'll shift gears to investor meeting real quick. Curious to hear your thoughts on what your predictions are for that. And then in the comments, if you have any questions for the panel for the last 15 minutes or so, please drop them down and I'll sift through and I'll bring them up. So and then Hans, we'll go after you too after the predictions for investor meeting. But what are you thinking happens? How do you think the stock reacts? Curious to hear your thoughts.
How do I? So it's next Thursday, 2:30, I think Pacific time is
This
is the
Thursday,
shareholder-
yeah.
This Thursday. Sorry,
Yep.
technically it's a long weekend in Canada. So
I know
still
you're
feel like I'm
really
last week.
far west in Canada. You guys are behind 1 week. I get it. It's okay.
Today's BC.
I'm
It's
just kidding.
BC day here, so it's like a stat holiday. So I'm still in holiday mode.
Nice.
But
Nice.
so Tesla shareholder meeting. I think it's going to be interesting to hear Elon's thoughts on potentially talking about the next gigafactory. I know it's early. I know I know it's still premature, and you feel free to yell at me in the comments about it. The last shareholder meeting, I think we got some insight as to when Elon was saying like they might start looking into it. And from what I recall, I think he was saying towards the latter half of 2022, which is kind of where we're sitting at right now ish. So I'd be curious to see if any questions are asked about new factories, or maybe Elon says like, look, Shanghai with the second half that we've built up is going to be more than enough for the next year for us to not even think about new locations for now. And when you're ramping up two factories, I mean, the last thing you want to do is talk about a third one. But that's one thing that I'm looking out for. I think the biggest risk to Tesla's growth is going to be the 4680s for next year. Elon said like this year we're fine on batteries, doesn't matter. But Elon's on record to say even a couple of earnings calls ago, where is the 4680s that we need for scale by spring of next year? And we got some clarification on that during the earnings call. I'd be curious to see if we get any more information about specific technology around the scaling, like the gigacasting news that came out. But I think overall the stock split or the authorized shares are going to get approved. I think my guess is probably the 2 weeks after is probably the date that they're going to set for the actual split to happen. Again, who knows when that'll happen, but that's my guess. And I think the stock will actually hold. I think if the stock holds up, we're at 891 is what we closed at today, 892. If we hold up above 850 past this week, I think that's healthy for where we're sitting at in the last couple of weeks for performance. I won't complain, but I also wouldn't be surprised if there's a lot of like FOMO buying happening before shareholder meeting, because like Tesla investors for some reason love to think there's going to be a secret thing at every event. So we probably get that, which makes me kind of think
That's
like
me.
the Friday we might get some like sympathy selling just for people that were like FOMO buying before shareholder meeting come in.
Yeah, I would agree with that. I think the thing I'm really hoping for is that we go ahead and get the full master plan part 3. I think there's a good chance that we can see that. And yeah, I know. So like Tesla Herbert the other day was in one of his interviews talking about the expectation of a whole ton of gigafactories being built before 2030 and needing to see some construction announcements. I think that, I would be interested to see where that goes. But to me, my biggest questions around scale are more raw materials, like gigafactory construction or terafactory construction, whatever they want to call them going forward. Like that's a solved problem. And we know that they can secure land, they can build quickly, they can ramp. Like those things are not the constraints, like the unknown constraints. I want to know, what can they tell us about how, and they've really played this close to the vest. But how are they going to secure all the lithium that they need through 2030? And, can they update us at all on their salt brine extraction process for lithium? Is that panning out, or are they still expecting to need everyone else to continue to mine and refine lithium? So I think those are what I would really hope for. I would say maybe 60% chance that we'll get that.
Yeah. So I'm gonna continue playing the hyperbole that I have been for the whole show here and throwing out crazy predictions. But so here's what I look at signals. I see a marketing campaign of sorts behind this annual shareholder meeting that hasn't existed before. The cyber roundup. So there's hype being created behind this thing. We have the inclusion of Tesla owners can directly link their stockholder account so that they can be verified as Tesla investors. So it seems like there's a little bit of additional juice behind this thing of like being an investor and being closely tied to the event. Now, of course, generally these things are very administrative and they're things that, you're just kind of going through the motions and ensuring you're getting investor approval, you're telling a story. But I really think the master plan part 3 piece that Hans brought up, and there's a question around that from Espen as well, I really think that becomes a gigantic focus of this discussion, because really the question becomes, how the hell do you get to 20 million by 2030 that you've been talking about? Like that's really I think the biggest questions that have been asked, especially from people like Gary Black and other people on Twitter, other analysts, is like, you have 4 factories today. We know you have 2 million capacity right now. It's probably realistic to think you're going to be able to get to 3 to 4 million with the existing factories that you have built, but you need to 5x this in the next 8 years to get to your goal. How? And we know that there's a raw material stuff, and Elon has talked about master plan part 3 in the past. So I do, in my eyes, that's a 95% chance likelihood that master plan part 3 gets unveiled in the investor meeting. There's no better place to do it, in my opinion. It really talks about what are the future plans for this company, So I think that's super, super likely. Do I have any mods blocking these people here? Come on.
Yeah, they're the worst.
My God, these things I hate it. Yeah. I hope Elon buys Twitter so he can make his YouTube freaking competitor and figure out how to deal with these bots, and I'm moving all my stuff there. Because this bot issue is like unbelievable. So I'm like super ranty today. I think Master Plan Part 3 is totally the thing that's going to get unveiled. And I do want to highlight this super chat from Baja Juicy. Thank you very much, man. $5 super chat. 10/7/2021 shareholder meeting. The stock closed at $7.93, and by 11/4 it was at $12.34. Yep. Okay, so past performance is not indicative of future results, obviously, but if it were, sign me up.
Sign me up too.
Any other thoughts around the investor meeting before we move over to questions?
Good for me.
No?
Yeah.
Okay. Oh, Ishan, make me a mod. I can help. Bro, I got you. Here. Let me put up a question first while I do that. So we'll go with our first question here. There was a question around where am I? So I'm looking for the formats here. Okay, here we go. Value to Tesla for new car self-delivery. So I'm assuming like a service center, instead of you going to pick up the car comes to you. How do you guys think about that?
I think they already did this in the earlier on their days. They would go to people's houses and deliver their cars, but self-delivery meaning like full self-driving, driving the car by itself.
Yeah.
I don't know if there's much value. I think it's a good shtick. I think it's a good marketing thing, but yeah, I mean,
it's at least the value of the time of whoever's doing the driving.
Yeah, but the thing is, as when you get your Tesla, you want to kind of get the intro to it. Like you want someone to walk you through it. Like the hand-holding onboarding process was like super important. And it is super important for people that don't know anything about a Tesla. So debatable, I think.
Yep. Can all of that be handled in software?
Yeah, but like I'm thinking of my grandma, like she doesn't care for software, but also she's probably not driving a Tesla either. So yeah, I mean, maybe.
Well, she needs to eventually.
she loves driving in it, but she doesn't like driving it. So
to me, it's like the biggest benefit would just be the cost reduction to Tesla by being able to cram a ton of deliveries through a single node and having zero labor attached to it. So it becomes like, how expensive is it to run a delivery sort of node right now? It's probably not that expensive, but if you can increase your throughput by, I don't know, 100x, and you don't have to use any capex to build more nodes, then that seems like a big deal.
It does bring up an interesting question. If maybe we should do the math at some point on, does it make sense to ship Teslas by freight if they can drive themselves point to point? And maybe you want to do that just so that, you don't have rock chips and things for new car deliveries. But
yeah, you're talking about the semis delivering. So Is that
Yeah,
did I
like
understand
instead
that
of
right?
transporting them across the country, from your factories to their customers on trucks, just have each one drive itself from the factory.
No, I would use the semi because of exactly what you just said. Is
Yeah.
the rock checks and stuff. Unless you can figure out how to, because technically you don't need a windshield to be exposed. You just need the cameras to be exposed. So is there like a protective coating that you can use that would be, eliminate that? And what is the risk of the car getting into an accident? Things like
Yeah.
that. So yeah, but it's totally doable. I think that's a great thought. Wesley asks, do you think Tesla creating a wireless Bluetooth, I'm guessing OBD is onboard device, maybe? I don't know
think-
if that's the case.
Yeah, I think
Or-
it's a thing that you plug in to see like what sort of errors are coming up on your car.
Oh, gotcha.
OBD2. Yeah.
And either sell it at cost or give it away for free to customers that haven't been able to transition to a BEV yet would be useful. Any thoughts about that?
I'm not entirely sure what that would do.
So
Is
Tesla's
he-
cars can take data like speed and location and integrate it into their FSD system, so they can see gas cars further out, or just to help the FSD
So I think,
system.
yeah, this is in the context of basically allowing you to use Tesla's platform services that we talked about earlier in the episode if you don't have a Tesla. And
Okay.
yeah, I guess it would depend on how much, the more modern cars do have a lot more data available on them. And so, yeah, there's definitely potential.
Another question. Existential. With AI's ability to solve a problem once and replicate, how are we going to deal with the increasing price of automation destroying the entire labor market? Yes.
There was
I've
this
been talking
case
about this a
study.
lot.
One of my economics professors in university told us about this case study in South America. I forgot what country it is, so I'm not going to pretend like I know which one it is. And there was back when refrigeration wasn't a big deal, and it was the icebox industry was huge. And there was a whole industry around icebox delivery people that would come by and put ice in your little box in your front yard, and you'd keep all your meats and cheeses there and whatever, and dairy. And they were saying there was a country in South America that rejected refrigeration. They said, look, it's going to kill our industry. It's going to kill all the jobs here. We do not want refrigerators in our country because it's going to ruin our economy. And that obviously aged like milk, no pun intended. So anytime you reject technological change, it could be good in the short term, but in the long run, it's just like shooting yourself in the foot. It doesn't do you any good. You're better off adopting to technological change. Humans will adapt. We'll find better, higher marginal benefit things to put our labor into, just like we did, for example, with the icebox industry. So I'm not worried about it. I think it's a short term pain for a long term gain.
My sort of so I agree with the overarching point that it's going to be figured out at some point, but I think I'm afraid that as a society we're not ready for those short to medium term impacts, and it's going to be a lot more hurtful. Like that short term gain might be like 50 to 100 years of like total destruction to the lower and middle class until we get to a point where it truly is democratized to everybody. That's my biggest risk. So I think like over the long span of civilization, I think it'll be positive, but I don't think we're ready for the near term impacts. That's how I think about it.
Yeah, I mean, there was a discussion. Oh gosh, who is it? I'll have to look it up. But there's a guy who was just starting an AI podcast. Who's a researcher, and he, this is the argument that typically gets made is, we've been through these periods in the past. There have been Luddites, and we typically, humans always find new things to do. And he's like, well, there's a potential argument to be made with the speed of how fast everything's going that we could literally disrupt almost all existing work over a short enough time period where you displace essentially the entire labor market way faster. In the past, these have always been kind of isolated to one section of the labor market, and that if we disrupt everything over the course of 50 years, that's just not enough time for humans to transition to whatever the heck else. But you're also looking at a thing where we don't really know what the economy is if you really remove a lot of the things that drive scarcity. So it's just crazy and scary to think about, and hard to wrap our minds around. One of the things that I've been thinking about a lot recently since we've been having these conversations, Farzad, is, maybe the thing to do to kind of guarantee UBI is to have basically a pool of capital that is being invested by private citizens, because I don't see the government moving quickly enough and proactively enough on this, that is invested in all of the companies that are actually creating the technologies that could potentially do all that disruption, and then just allocating that capital towards trying to figure out how to make that transition as smoothly as possible.
I like that idea. I think the obvious complexity there is like identifying companies outside of Tesla that are actually doing that in good faith, and they're not just milking because that's one of the weaknesses of capitalism, is that it opens the door for people to just play everything purely for profit instead of creating incredibly valuable things that just happen to be incredibly profitable, right?
Yeah. So and the ability to do that differentiation is so hard, as you can see by, like, I think angel investing or VC investing is a great window into this, that, anyone recently was able to do well in those industries when we were in a bull market. But then when we go through these bear markets, you see, okay, who are the people who actually knew what the heck they were doing? And you find out it was not very many of them at all. Like, everyone was a genius in a bull market, but then the wave comes through.
Single percentage point of people that actually know what they're doing.
2%, 3%, 5% who are actually good at that. And like, so those are the people that you would need to be in charge of, differentiating who those next wave are going to be.
Yeah. Well, great discussion. We're at time. Yashu, thank you so much, man. Thank you so much for making the time and coming on. Super fun discussion. Hans, thank you so much for being part of the panel again. Thank you to everybody in the comments for posting comments and asking questions. Great questions, great comments. Thank you for all the bots for coming in and trying to get us to their dating sites. Bunch of fucking assholes. But yeah, thank you, man. Thank you very much for coming on again. You're obviously welcome back anytime. And you won't be in Austin for the Investor Week, will you, this week?
No, I will not be.
Okay.
Yes.
Okay.
I haven't been to Austin ever. I do want to get to Austin.
Dude, let's go. Can you come down this year sometime, you think? How's your schedule looking like?
Yeah, I mean, this week is
or this year rather.
Yeah. I'm staying away from like the Canadian airport situation is so garbage around here. It's like, there's been horror stories of people waiting. So like we decided we're not going to fly anywhere this summer. But if it eases up in the fall and like less report, I'm super impatient. Like if I have to wait more than an hour more than expected, I just get upset. So, but yeah, no, I'm down. I've been to Dallas, haven't been to Austin. That's my next goal.
Be super fun to all come down for AI Day.
Yes.
Yeah, true.
That'd be sick.
Good point.
Yeah. Let's try to make that happen. September 30th.
September 30th?
30th. Oh, that's enough time. Yeah. Huh.
Yeah.
If I can get
Book the flight.
I wonder if I can get
Everybody, tell Yashu to book his flight. Go on Twitter, spam him. Just kidding. Don't do that.
Maybe I'll just road trip down. It'll take me like a cool 8 days worth of driving.
Yeah, sure. You have a place to stay, man. Just let me know.
I appreciate it.
We'll make sure you're nice and rested. Thank you, everybody. Thank you, Yashu. Thank you, Hans. We'll see you in the next one, everybody. Thank you.
Thanks, everyone. Take care.